before we get into this week's calendar, why do we look at calendar events? Now, if you just take a look here, I'm going to show you why we spend so much focus on calendar events, because we're going to be looking at the Australian dollar CPI print and how that provided a top high probability trading opportunity. On April the 24th, the Australian CPI data was coming out. Now, the Reserve Bank of Australia have moved to a more neutral stance because they've been saying at the last interest rate meeting that they're not ruling anything in or out with regard to the path of interest rates. So that gives us a much more neutral perspective, and that meant that there would be two-way opportunities on this Australian dollar CPI print. Now, the Aussie CPI print we were looking for is if we saw it coming in very strong above these numbers, then we would expect Aussie New Zealand dollar buyers. And you can see here we're looking for the quarter-on-quarter data, 0.9% or higher, year-on-year 3.7% or higher, trim mean 1% or higher, trim mean the core coming in at 4% or higher. Now, you just take a look at the decision, and if we just go along to the 24th of April, we can see here it is. You see how the prints, 3 out of the 4 prints came in above market's maximum expectations, and that gave a clear buy bias in the Aussie New Zealand dollar pair. And if you just take a look at the reaction, you can see that in the minutes after the CPI release for about sort of 20-30 minutes, there's just been solid Aussie New Zealand dollar buying. Now, when you combine that, looking at pivot points, key overhead resistance areas, there will be a clear buying opportunity, and they're the kind of opportunities we're looking for, just picking them out week by week in situations we're expecting a clear direction for, a good 20-30 minutes of clear directional bias in the specific circumstances we highlight. That's why we look at the economic calendar each month and each week to spot these opportunities before they occur. So let's look at the key calendar events for this week and to see what potential opportunities we have. On Monday, we start with the different state CPI readings out of Germany. Now, Germany, the IFO business metric ticked up for the 3rd time in a row, and we saw a bit of an uptick in German consumer confidence last week. It'll be interesting to see how inflation is doing. Inflation in the Eurozone as a whole is tracking lower. You can see the core continues to track lower, and also the headline continues to track lower. So markets will just be keeping an eye on this German inflation to get a sense of how the Eurozone as a whole. There's probably not going to be an opportunity on this unless there's a really big surprise to the upside or the downside. So it's something we'll pay attention to, but not really expecting any opportunities. And this inflation reading for Germany will play into the overall inflationary reading that we get later in the week. Not expecting very much, but just keep it in the back of the mind that that could result in some euro volatility, although there's unlikely to be much moves in the euro, as the euro is mainly responding to what's going on with the dollar right now and the higher for longer rate narrative that's beginning to emerge on hotter inflation out of the US than markets were expecting. On Tuesday, we have Japanese data overnight, not expecting that to mean anything. Bank of Japan's Governor Ueda saying that it's not a zero chance that there might be an extended period of yen weakness. So Bank of Japan just signaling that they're not overly worried about that recent bout of yen weakness. Of course, we have to be mindful of the fact for potential intervention from the Bank of Japan, but the basic way of playing that has been buying any strength in the Japanese yen, particularly if there's no reason for sudden strength in the yen. If it's just speculation, markets are quite happy to keep testing the resolve in Japan, which seems to be pretty weak, and obviously US 10-year yields tracking higher and higher and higher is supporting the yen lower and lower and lower. So, Japanese data unlikely to be moving markets very much at the moment. Going into the rest of Tuesday, we've got some German unemployment GDP data. That's going to start flowing into the overall Eurozone metric. So Germany is in recession, but the IFO business data last week and the German consumer confidence probably indicates the worst is behind for Germany. The base case is for June rate cuts now out of the ECB, but the bigger question is what will be beyond June? And there's potential for a divergence in the ECB compared to the Bank of England, which we're going to keep an eye on this week and see if there's any sort of movement towards euro pound upside, and Eurozone GDP and inflation data will be key to that. So this is something to look at, but not expecting much movement on. Now, the Eurozone inflation data and the Eurozone GDP data will be important. And June is the base case for a cut. But if we start to see inflation ticking higher and or GDP ticking higher, we might see the rate expectations for further cuts just start to fade. If you just take a look now at interest rate expectations for the ECB, short-term interest rate markets see a June rate cut as 69% probability, and at the current rate of 4%, short-term interest rate markets see 3 interest rate cuts this year. So what we'll be looking for, Eurozone GDP and inflation print, is something that's hotter, stronger. And if we see higher inflation than the market's expecting, we'll update the forecast as we go through the week, and higher GDP than markets are expecting, I wouldn't be surprised to see maybe the euro gain against something like the pound. So that's something to be looking out for on Tuesday. As we go through, we've got US consumer confidence, not expecting much activity from that. New Zealand labour data, a little bit of information overnight, not expecting major moves in the New Zealand dollar. Coming through to Wednesday, S&P global manufacturing PMIs. The ISM manufacturing PMI is more interesting. ISM is the more influential PMI reading. And we did see softer PMIs from the S&P Global last week. And if we see softer than the markets are expecting here, then we could see a bit of a reaction in the dollar. Market quite happy to sell the dollar when it has a reason to, and the prospect of a slowing US economy is a potential reason for dollar weakness. We saw that last week with the S&P Global PMIs surprising to the downside. If we saw that again, a big surprise to the downside, would expect a potential move lower in the dollar. We'll be keeping an eye on that and updating the consensus nearer the time. Obviously, the Federal Reserve meeting is on Wednesday. Now, after that surprise GDP miss last week, coming in at 1.6%, which surprised the vast majority of analysts surveyed in anticipation of the event, and the hotter inflation that we saw come out of the PCE deflator, leading to expectations for higher inflation generally in the US economy. Now, if the Fed hadn't signaled rate cuts, and if you look here at the last summary of economic projections in March, they signaled quite clearly here in their dot plot summary projections they were expecting 3 rate cuts this year. Now that looks very unlikely. So what markets will be looking at here is, how does the Fed narrative and the Fed perspective change? Do they even start to begin talking about interest rate hikes? It's not inconceivable. So we could easily see quite a bit of backtracking from the Fed with this May meeting, and markets will be looking very carefully for particularly the press conference to get a sense of how worried the Fed is about this recent uptick in inflation. So that will be a key focus. We'll have an update nearer the time. JOLTS jobs is just being released the same time as that ISM PMI print. We'll cover that on the Wednesday. Going to Thursday, the Swiss inflation print is going to be of interest. We have seen falling inflation in Switzerland. You can see that the core moving 1%, that's within the SNB's target. Headline 1%, SNB's target month-on-month reading has been moving lower as well. So lower inflation has been allowing the Swiss franc to keep falling, and you can see that that weakness in the Swiss franc here since the start of the year, weakness, looks a bit stretched. So what I'll be looking at here is if we have reasons for the Swiss to be surprised. If inflation comes in above markets' maximum expectations, you could suddenly look for a sudden flush of Swiss franc strength as some of that Swiss franc weakness gets priced out. So be looking for that on Thursday morning, and also be looking for any surprise at the downside as well to give another push lower in the Swiss franc. But if you look at short-term interest rate markets expectations, they are already expecting a cut in the 20th of June meeting, and beyond that they're expecting another interest rate cut just about into the end of the year. Not quite, but very close to another interest rate cut this year. So, we need something that really moves the needle. Best opportunity will probably come on inflation surprise to the upside, and it will suddenly see a bout of Swiss franc buying. As we go through into the rest of Thursday, there's a smattering of data points, nothing that's jumping out here as particularly interesting. Got some final PMI prints, that's not really of any interest. Friday is more interesting. Obviously got the non-farm payroll data and got the Aussie PMI final reading, so that shouldn't move markets much. German PMI composite readings, final readings, not really of any interest. It is the NFP and obviously the ISM data for services coming up at 3. So 2 big events coming up on Friday, and this will be viewed in light of the latest Fed decision. And the basic way of understanding this is strong jobs market is inflationary, weak jobs market is deflationary. So that will be an opportunity for us to get ready for. Alongside this, we've also got the ISM services PMI, and a big miss here, and we could see some sharp moves, and we'll be playing the dollar in light of what's going on with the non-farm payroll, and then that will affect our expectations for what happens on Friday. So a busy day on Friday, picking our way through these 2 events, which are important and quite close together, and will have to be interpreted in light of the latest Fed decision, which won't take place till Wednesday. So we'll have all the forecasts, the lows, the highs, updated nearer the time. But that's what I'm looking at. This is, why we look at these calendar events, for the short-term opportunities that pop up, and when we get them, we need to be ready to pounce. So that's don't forget to look out for the cheat sheet and all the preparation that comes closer to the event. Otherwise, I hope you have a very good trading week.